Hello there, let's cover MTOX and we'll start by the charts. This is the long-term chart going back to the company's IPO in 1992 when it was trading above $100, and now, well, then it collapsed to less than $5, now trending up again. As we can see on the short-term chart, we have this ascending trend line, and the stock is trading above the 50 days and the 200 days moving average with volume above average. You can see here this ascending trend line support is at about 18 and the stock is trading at 18.28 now, so approaching technical support after this ugly red candle after the earnings results release. As for the fundamentals, let's see fundamental analysis. Here we have the share count since 1997 until now, and the market cap. Market cap is the yellow line. Well, in 97 the company had 5.2 million shares outstanding and 8.2 million now. So the share count grew 4.5% a year on average since 97, and the market cap, which is near an all-time high, grew about 24% on a compound annual growth rate to $154 million now is what this company is worth. As for the balance sheet, long-term debt as is being paid, you can see it is just $3 million now, about that, and the current ratio is, well, near my minimum threshold of 2, so acceptable. The problem with this balance sheet is that cash and marketable securities account for just 7.2% of total current assets, and receivables account for 62.7%, and they are growing 9.7% on an average annual basis. So the balance sheet is kind of weak. I'm going to consider 4% dilution factor going forward on my valuation model that we'll see next. As for revenues, since 97, when revenues were 28.6 million, and to the expected 2008 revenues of 92.9 million, this is growing at a compound annual growth rate of 11%. And the industry average grew 27.7% from 2005. So this is a steady but low growth company. Gross margin 46% for our company and 46.6% for the average. Price to sales ratio 2.21 for MTOX and 5.35 for the industry. So it seems trading at a discount, but that's because it is growing less than the industry average. Gross margin remained quite stable over the years, and it was at its highest here in 2006, 49.3%, and expected going forward about 46%. Let's study earnings and net profit margin. Well, they've been quite erratic. Well, that's a problem with this chart. I didn't put negative values on scale, but you can see here in 98 the company lost 44 cents per share, in 2000 lost 45 cents per share, so we should have here red bars on the negative side. Sorry for this. Well, but since 2004 earnings are growing, and they were 52 cents in 2006 and expected for 07 72 cents and for 08 89 cents. As for net profit margin, it was 6.52% in 2006 and 8.17% for this first quarter, so I'm expecting about 8% for the full year of 2007 and 2008. Price to earnings ratio, considering the 2007 average analyst estimate of 72 cents, MTOX has a price to earnings ratio of 25.8 and the industry average is 24.13. Well, given all this, my valuation model for the next 3 years says the following. I have well, these yellow lines are known facts. This is the share price at the time I did this, 18.57. The initial share count is what we have now in terms of shares outstanding, 18.18 million. and the dilution factor I put here 1.04. It means 4% dilution going forward. Historically it has been 4.5%, but since the balance sheet improved a bit somewhat over the past 3 years, I put just 4%. This gives me a final share count for 2009 of 9.2 million shares. Initial revenue, this is 2006 revenue, 69.8 million, and I expect revenues to grow about 15% on average going forward. So final revenue in 2009 is 106 million. Initial net profit margin, this is the 2006 net profit margin of 6.52%, and for 2009 I expect 8%, which is what we had this latest quarter. Final net income estimate $8.5 million, which gives me earnings per share estimate for 2009 of 92 cents per share. Earnings per share multiple estimate, this is the industry average, is 24.13. Let me see what this is the industry. Just a second, this computer is a bit slow. No, not this. This is medical laboratories and research industry with a 24.13 average PE. So this gives me a final estimated share price for 2009 of 22.28, which means the share price will grow at a compound annual growth rate of just 6.3%, and I'm looking for at least 16%. So MTOX, sorry, what is this sticker? Yes, MTOX isn't attractive according to my valuation model, and the optimal selling price would be 14.27, so too close to what we have now. No, below what we have now, the stock. So not attractive. On a 1 to 10 scale I gave it a 5. Thank you, bye.